Hi guys, and welcome to 21metrics podcast. I'm here today with Juhani, Savonen, our Quant, and we are about to discuss Bitcoin market and macro and everything related to cryptocurrencies and digital assets.
Yeah,
Welcome Juhani.
yeah. Thanks a lot to be here again. Yeah.
But first, don't forget to check our partner sideshift.ai. I will add the link to our show notes. But yeah, Juhani, let's discuss Bitcoin. So Bitcoin is right now at 94k USD, and we saw like Bitcoin gaining more ground, like almost reaching 100k. I think the recent peak was like 98k there, and right now we are seeing some like buying pressure from retail, but not that much from whales. So like how do you see it? Could be reaching like higher levels? Is like 100k reasonable target or like plausible scenario? How do you see it playing out?
I think it just depends on the market liquidity because it's kind of like we have seen like more like stabilization in 1.5 weeks, I think so. So it's more like stabilizing around the current levels, and I see actually more like downside, at least in
Okay.
the sentiment side, that we can probably later discuss because I kind of like feel that that's we see and also in tech stocks like Nvidia or Palantir and others as well because they have also trading down a bit in the last couple of days. So
Yeah.
this little bit shows that there's more consolidation and probably a little more possibility of at least some sort of correction.
Yeah.
But yeah, because it's kind of like the little bit like the current situation, I think, because there's not so much like pressure upwards anymore, like we saw like last 3 weeks when we basically traded pretty strongly from low 80s back to high 90s, I think so. And that's kind of like the current setting where we are. Yeah.
Yeah. When looking at funding rates, we right now have like a positive funding rate, but it also like went negative very recently. A negative funding rate, uh, it mirrors like growing amount of shorts. So do you see like the real question is here? I would like to ask you is that like how correlated you see Bitcoin being with the stock market and what there's this like sell in May effect in stock market. Do you see also it happening here in crypto, or is Bitcoin decoupling from tech stocks, or what's your opinion on that?
I think it's at least like highly coupled with like semiconductors. Like if you look like the websites of crypto news sites, which normally can be seen as a proxy of the market sentiment, they normally publish a lot of news about Nvidia or TSMC or ASML, like those typical providers that produce the like chips that are normally used by Bitcoin miners, for instance. So that's kind of like more the connection to the tech market, I think so, because we
Yeah.
know that in these days, like Nasdaq and other tech indices are mostly driven by those semiconductor stocks because they are more volatile and cause the main larger moves within the stock market. So I think that's kind of like the main connection to the tech stocks that has been happening in the last couple of years, and that's why we have seen higher correlation between Nasdaq and crypto, and I think especially in Bitcoin, like some cryptos a little bit less, but especially with Bitcoin, the correlation have been increasing.
Yeah.
Yeah. And I think it's also like just if I use like this sentiment things that I will show later, they typically also indicate quite well where Nvidia is heading. So it's also like other good point to make why there should be like more connection between cryptos and tech stocks, especially in the ship industry. Yes.
Yeah. I think like one plausible scenario I have been mentioning in this podcast might be that Bitcoin might be hit by this sell in May effect as usual, but this year it might be like lighter than usual. I don't know. It's like just my opinion, but usually like the summer season is calmer than other seasons, and like thinking about Bitcoin's seasonality. The Q4 has been the most bullish or most positive of all the quarters. So it could play out last year. I think that
Yeah. Actually,
it,
last year was
it,
like really strong, like Q1, and then really mild Q2 and Q3 when
Yeah.
we basically traded around a couple of thousand euros, but didn't
Yes.
move anywhere actually. And
Yeah. So
Q4, yeah, I think like the last 3 years, Q4 has been always the best month for equities and any risk assets actually.
yeah, as I said, it's also for yeah, risk assets and like stocks as well. I remember that you argued that why the Q4 is so positive is that like people have these bonuses like at the end of the year, as you said, like there's this like a bonus season going on, and then people might have like
Extra cash. Yeah, because it's also like that in Christmas, normally people get like extra salary, at least that's the
yeah,
common practice in Germany and a lot of parts in USA as well, I think. Like a lot
yeah,
of companies that have 13th salary or how it's called. So
yeah,
the people have like extra cash, and because they know that they get this 13th salary in December, they might be spending more in those months before it, and this
yeah,
might be the one of the reasons why there's, let's say, extra capital available.
yeah. So
But I
Christmas and
Yeah,
yeah,
but I guess like Christmas and end of year might be more positive, that people think that next year is going to be better and people just buy more risk assets in general. Yeah,
yeah, and it's
because
like
we
yeah.
because we see this kind of like in the beginning of the year normally, that in first 2 3 weeks are really bullish and then it might reverse like this
Yeah,
year as well.
yeah. So end of the year bonuses, yeah, that's a good argument. I can believe that, yeah, easily. So like yeah, so this year's scenario might be as last year in 24, that a positive Q1, then like a calmer Q2, maybe like a more moderate summer season as you mentioned, and then like recovery by Q4, and then new all time highs by Q4 by the end of year. Yeah, that's like the usual cycle, and I can believe that. But let's look at like institutional demand. So this is the balance sheet of micro strategy here, or actually nowadays we should say only strategy, or like in MSTR, the company, and they have still been buying. So as I have argued in former podcast sessions, that investors' buys are usually like a pro-cyclical. So it's usually a good sign when they are buying, and they're usually buying when the spot price is going up or has like the potential to go up. And as you can see, like here during like 22 23, when the price was or BTC USD was more flat, they weren't buying that much. Like here in late 22, for example, MSTR wasn't buying. So I think as long as Sailor keeps buying, it's a good indicator, good signal for
Yeah, it's like supports the market because he's kind of like a little bit like the central bank of the crypto market in this case.
yeah. Okay.
Yeah. Because he's kind of like is the last lender or buyer in this case, like providing the liquidity when there is none. Like
Yeah.
at least in the beginning of this year, it has been for the cases that market might be like trading down a bit, and when he buys, then the market reacts up, and then
This is
it
actually
later on, yeah, then it
this
later on like disappears the effect basically. I think so.
right. Yeah. This is like a new one for me. As I said, that MSTR is the central bank of crypto. That's interesting. Was this your did you read this somewhere, or is this your own like?
Yeah, because I kind of like see it like that, because in the past when the central banks were providing the liquidity, it's like the last lender standing when there's no other bank to go into. And then normally in this bull cycle, at least MSTR has been acting like the last buyer available basically, and just kind of gives me a
Yeah,
little bit like that kind of dynamic for crypto market, right? At least for BTC, yes.
yeah, that makes sense. Yeah, yeah, but they're still buying, so that's a good
Yeah,
indicator.
at least they get to like steal money from credit market. That's a little
Yeah,
bit. I think it eased a little bit, like after Donald Trump was a couple of weeks silent, so like the yields went lower, and yeah, so it's kind of like probably they still could raise capital actually.
yeah,
This is more like the question, if something happens in the housing market, then it might slow down their ability to get more capital from the capital markets, right?
yeah, yeah. makes sense. Yeah. Okay, so next one is spot retail activity. This from Crypto Quant. So this basically shows that many of the retail investors entered between 55k and 73k, and still like now that we are at 94k, Bitcoin could like correct a lot, and they've still be at profit. So that's a good sign, because according to this chart, Bitcoin should go below 95k in order to the like mass retail investors to be at loss. And I think it would require a lot for Bitcoin to drop below 95k for like extended time periods. So yeah, that's and also we can see here that actually many retail investors both at 16k. So this is based by crypto quants on-chain data, and I think like many guys, when you look at the left part here, many bought Bitcoin in like December 22, January 23. So they were like that's very good timing. So I think yeah, Bitcoin would need a lot of like downward pressure in order to these investors to panic, I would say. So they're not like panicking anytime soon. And yeah, that's this is some positive data from Quant. And when looking at our power law model from 21metrics, we can see that the Bitcoin is right around the power law fit here. So it's kind of like power law is the fair price, and Bitcoin is right around the fair price. So it's like you could say it's fairly priced currently. What else? Okay, so gold is also going up a lot. How does it like? Could gold be indicating like new potential conflict, or is it just like some kind of like macro risk indicator, or how does it? Because
Mm,
gold is
I,
nowhere.
I I think it's just like a little bit increasing liquidity and
Yeah,
distrust to U.S. government actually. Like
yeah,
we have seen in the bond market behaving a little bit differently than it normally does, like having higher rates and all the money going to gold actually recently. Yeah,
yeah,
yeah, and it's still like my view is really bullish on gold just because the geopolitical situation and uncertainty around the tariffs and that's kind of like the main
yeah,
driver for it as well. A little bit follow like the news flows in gold market and it's still like really bullish at the moment.
yeah,
Yeah, yeah, but it's kind of like different because that's kind of like really safe assets that like basically like the central banks hold in their balance sheets as well. And if there's like more risk in tariffs, then the demand on the physical gold might increase. That's like the typical situation and
yeah,
when the geopolitical politics become more challenging.
yeah, yeah. So Bitcoin can be considered as digital gold. That's usually said about Bitcoin. So if you look at like Bitcoin's market cap, I have often been talking about this, that like gold's market cap is around like 10 times of Bitcoin. So if Bitcoin would reach gold's like cap parity, then Bitcoin would be almost like 1 million USD. So how like probable do you see it, or this scenario? So can Bitcoin reach like market cap parity with gold? Could it happen? And like how plausible do you see it? Or of course, also need to maybe talk about time frame. But do you see it like happening at all, or how do you see it? Like,
I think like gold and Bitcoin are like different assets.
yeah,
Like Bitcoin is basically proxy for quantitative easing on the monetary base, so it's more like driven because it's kind of like has a strong. If you look like change in Bitcoin price and let's say how large change in the monetary aggregates happens, that's more like a proxy for it, I think so. And
yeah,
whereas gold is more like you actually want to hold it when everything falls apart. So it's more like proxy for geopolitical risk and political uncertainty. So
yeah,
Bitcoin is, I think Bitcoin is more like a hedging asset class for against the central bank action. Like it basically was founded on that, right? Like if you look at the first papers from after a financial crisis, then people just wanted to have this asset to make sure that they have something to rely on when central banks print a lot of money.
Yeah. And I said that Bitcoin is this global liquidity proxy, as we can see here in this chart. It was
It's
kind
clear.
of following the
Yes.
like the amount of money or amount of fiat. How do you want to say it? Yeah.
It's kind of like I think it's translated from all the central banks. So it's kind of like okay, but it has a little bit challenges when you use the, let's say, FX rate of US dollars every day for Japanese yen or other EM currencies or European euro as well. So that might also like a little bit elevate it more than the dollar market is moving at the moment. But it's good proxy, I think so. At least it's the main thing that long-term investors in crypto assets should just look into, I think so.
Yeah. So excess liquidity is flowing to Bitcoin, and also like even higher beta crypto assets like
Actually, like
small
MSTR or HODL as well, like
NFTs,
the
everything.
yeah, or like any like crypto related asset like stocks basically are pretty good, let's say asset class to hold in part of portfolio and let's say monetary base increases.
Yeah. Agreed. But then I think we have your slides here. So quant models. Do you want to talk about this? Like first we have.
We can just have like a couple of, let's say, comments on
Yep.
all these things that we have like from the previous times when I was checking like the liquidity. Now it's a little bit increasing like 3 or 4 weeks ago, but there's like a lot of differences in the liquidity indicators inside the calculation, which is kind of like driving the movement. So most of the like increase has been just because there's more been derivatives trading actually. Like in the CFTC reports, I've seen that the open interest have drastically increased. So risk taking actually has increased in the last 2 or 3 weeks, and that's kind of like the main reason also why people are so much willing to pay some extra money for 1 unit of Bitcoin, for instance.
Yep.
Yeah, and also like Nvidia or any other like tech stocks, Palantir as well, and the other ones. And that's kind of like why is it also like a little bit risky, because the other part of the calculation is a little bit declining outside the leverage. Like the credit market is still like continues to deteriorate, and how much loans are originated, and that's kind of like more like negative side. So it's slightly still increasing, but most of the big movement to up in last 3 weeks is kind of like calming down, and it's kind of like, but it's kind of like supportive for crypto prices, and that's kind of like good thing to follow. But just want to make sure that it continues to go up to be more bullish again.
Yeah. Agreed. Then you have this on-chain activity.
Actually the on-chain activity still has continued to go down quite drastically. Like the mining activity is still like down, even though like the mining revenue increased quite strongly in the last couple of weeks when we saw the increase in stock prices or MSTR, Mara, and the other miners, which increased like 30% in last 3 weeks of April. That was really bullish weeks in the crypto equity space.
Yeah.
But now it's still like declining in the other parts of the data, like how much new accounts are generated and how much is held in those accounts.
Yeah.
So there's still not so much movement in usage of the Bitcoin as a blockchain. So that's kind of like more bearish side, I think so. And that's kind of like, but let's say worries me most in this crypto space, because kind of like this doesn't really like match with the like really bullish view that everyone has in Twitter or Reddit as well, because we still see that the activity is going down, and normally it's kind of like good proxy where in long term, let's say Bitcoin price would go, because like the sentiments have been really bullish, like we see in the next slide. But still like the on-chain, that should be like the fundamentals of the Bitcoin asset, so still like really bearish in that side. And because we also in this slide we had really one of the strongest like bullish trends in sentiment in last 3 years, I think. So if we exclude the Trump election after Trump in last November, actually, that's kind of like probably the strongest like increase in the positive sentiment. And that has been reflected quite well with some lag to the prices when we had the jump that we discussed in the beginning from the 80 to over 95.
Yeah.
You
Yeah.
jump, and now it's like calming down, like I mentioned as well, that we see also in the liquidity developments, and that's kind of like probably why I see that there might be a sell of May effect incoming, because we see that less other sentiments as well, which I've been looking into, also like slightly declining in the tech stock for tech stocks as well. So that
Yeah.
would be also like indicative that there's potential for at least short term, let's say, correction, and it might be that thereafter we have more like stable pricing levels over the summer, and then we would reach like higher levels in the Q4, like we discussed before.
Yeah.
But currently like the sentiment looks for short term pretty bearish, together with the bearish on chain and lower increase in the liquidity proxy. And that's
Yeah.
kind of like that's why in short term I expect that we have that sell of May effect in following weeks. Like that has been already happening this week, right?
Yeah.
When we have started to, since the last weekend, we have seen that prices have been falling steadily.
Yeah. Agreed. Agreed. Yeah. Okay, good stuff. As we discussed in the beginning, right now we might have this selling May effect. How like pronounced it will be, let's see. But then again, like summer season usually is more calmer. Like Bitcoin might not correct a lot, but still like. There probably is not that much happening anyways, but then again, like market will recover by the Q4. So I think we agree here with Juhani, and it is backed by on-chain data from crypto Quant, and also we have been using Juhani's Quant models. But yeah, awesome stuff, Juhani, as usual. And I think we can wrap this up. And so interested to hear your views in future, if you can join
Yeah,
our.
yeah, we can show and do later again to check where how things look like.
That
Yeah,
would be awesome. And so yeah, thank you, Juhani, and also check our partner Quant X. Thank you, viewers. See you next time. Thank you, Juhani.
yeah. Thanks a lot. See ya. Bye.
Guys.